Now, my little daughter, when I'm discussing this, she says, Dad, they're in the air. And she's probably right. They're in the air. But they're not on the balance sheet. The Gulf Airlines boast every year how many aircraft they order. They're very happy. They say, we've ordered. Emirates is boasting that they have 86 A380s on order. But why aren't they on the balance sheet? You know why? They're under an operating lease. Please don't ask me where is the aircraft, whose balance sheet it is. I can never figure that out, right? But it's under an operating lease. Why it's under an operating lease? People love operating lease accounting. They would love to have the asset, but people are more conservative. They don't want liabilities. And the whole thrust of leases, or the discussion around leases, if I have a debate with clients, I'm a technical partner by profession, right? The main debate I have with clients and regulators for the last 2 years has been whether something is a finance lease or operating lease, and clients' preferred argument is that something is an operating lease because they don't want the liability. And it's not correct. IFRS 16, what it will do, IFRS 16 will get rid of operating leases for lessees. Every lease going forward is going to be a finance lease. So I've given you the conclusion of IFRS 16 already. But this is going to be a big thing, and it means a lot. But let me come back to this. Why is there such a debate over whether something is a finance lease or operating lease? Today, if you want to get off-balance sheet financing, if a client comes to me and says, hey, I want to borrow money, but I don't want the liability to show. You know what you tell them? Do a sale and do an operating lease back. You get money in, and in an operating lease, there's no liability. You understand the issue here? So, operating lease, the standard setter sees it as suspicious. Why do they see it as suspicious? Let me tell you why it's suspicious, or maybe it's overstructured. If you look at the current IS 17, what's the definition of a finance lease? A finance lease is a lease where you transfer substantially all the risks and rewards of ownership to the lessee. Of the many indicators of a finance lease, the following are there. Does ownership transfer at the end? Is there a bargain purchase option? Is the lease for a majority of its economic life? Is the present value of the minimum lease payments equal to all of the fair value of the asset? Is the asset of such a specialized nature that only the lessee can use it without alteration? Is there a bargain lease renewal period? Does the residual value risk flow to the lessee? Does the lessee bear cancellation costs for the lease? That's the definition of a finance lease. You know what's the definition of an operating lease? An operating lease is a lease that's not a finance lease. Yet in practice, we see so many. When I'm challenging clients, they show me that the lease is used for, the asset is leased for 74.9% of its life. Therefore, it must be an operating lease. Or that the present value of the minimum lease payments are 89.9%. Therefore, it must be an operating lease. You see, people don't like liabilities. IFRS 16 changes that. What IFRS 16 effectively does, it says, Mr. Lessee, sorry, Mr. Lessee, you are not going to get an escape from the liability. So even if you have a 2-year lease, you are going to have a liability, and you're going to have an asset. You're going to have a right of use asset and a liability. And this is going to change balance sheets forever. It's going to change, it's going to significantly impact your balance sheet. Massively. Think about this. You're going to have more liabilities. If you want to quickly do a check on your impact on your financial statements, in your IFRS financial statements, towards the end of the financial statements, near the subsequent events note and the going concern note, you have a note there called lease commitments. lease payments due within 1 to 2 years, 2 to 5, 5 to 10. Take that number and present value it using a discount rate of 8 or 9%. Guess what? That's the new liability that you will be booking on your balance sheet. And you know what? When you have more liabilities, guess what happens? Your debt to equity ratio changes. Your debt to equity ratio changes, which means you may be in breach of your covenants and you may have to go back to your banks to negotiate your loan. It may become repayable on demand. That's one. That's one aspect. What else? Your liabilities increase means the cost of your borrowing may also increase because you seem to be more heavily funded. You appear to be a higher risk. Your EBITDA will increase. Lovely. EBITDA increases. EBITDA, earnings before interest, tax, depreciation, and amortization will increase. Why? You no more have an operating lease expense going through expense line. You now will have interest because you have a liability, and amortization or depreciation because you have an asset. So your whole balance sheet, income statement, even your cash flow statement will completely change. IFRS 16 is effective from 1st January 2019. I'm currently doing about 3 or 4 impact assessments because clients absolutely need it. These clients are looking at IPOs in future. They're looking at debt offerings. And this, their balance sheet will be changed tremendously in 2019 when the standard becomes applicable. So this is a big thing. It's not a small thing. That's why I've chosen to start with IFRS 16. It's far out. It's very far out. But the preparation starts now. The messaging starts now. I'm going to tell you the challenges we are encountering in practice as we speak. And then you will realize that we need to be taking action now. IFRS 15, the way I would approach it, the revenue standard, look, different industries may have different impacts. The people who are mostly impacted with IFRS 15, I would say, are telcos. I would also say are real estate developers, are aerospace and defense asset managers. IFRS 16 impacts everybody. Everybody who has a lease is going to be impacted by IFRS 16, the new standard on leases. It's not industry specific. In fact, it's industry agnostic. You know, I've been talking to banks on IFRS 9 the last 6 months, and they say to me, we don't have to worry about 15 and 16. And I say, Mr. Bank, you are wrong. Mr. Bank, you are wrong. The only PPE on your balance sheet is your head office building. But your 58 branches and your 132 ATMs are all under lease in the malls. Therefore, these will come onto your balance sheet as an asset, which will affect your capital ratios, and correspondingly, you will also have a liability. So things will change. It's not the same. This is what I'm trying to say. The world will not be the same again. The world of accounting. Yes, the other world too. I mean, Donald Trump, Brexit, things are changing. But the reality is the accounting world, or the way we have learned and been taught accounting, is going to change forever. These 3 standards, IFRS 15, 16, and 9, are game changers. They are absolute game changers. What I'm going to attempt to do in this little session with you is give you a sense of the impact. What I want to leave you with, I'll tell you what my objective is. I want to leave you with a sensation called agitation. I want you to feel uncomfortable. Because change is supposed to be uncomfortable. You know, even if I get a new mobile phone, even if it's a better phone, the first few weeks you struggle. Change is uncomfortable. But I need you to think about this, to start preparing for the change. That is my objective. If I achieve that, then we've succeeded. All right, so look, that's my agenda. I'm not very disciplined with agendas. I will stick to the prayer break and the prayer and tea break, and I will stick to the closing time because I have a flight to catch. Otherwise, I mean, my colleagues will tell you that I can carry on. I talk for hours and hours on this because I'm passionate about this, and I genuinely believe that people need to know about this. So I'm going to be starting off with IFRS 16. I then will go on to IFRS 15 at a high level. At a high level, I will cover IFRS 9. Why? Look, I've been doing tons of impact assessments. I've been seeing the issue for those that have to adopt it. I'm involved with some of the biggest banks in the UAE. In their IFRS 9 impact assessments, we're now looking at the implementation phase. I can give you stories. But I know in Pakistan, the banks currently do not follow an IFRS 9 kind of framework. You're following regulatory provisioning, etc. So I will give you some highlights of the standard, because if you are a non-bank, you still have to follow IFRS 9. And if you want your auditors to sign off a clean audit opinion, you need IFRS 9. And it will also impact you. But thankfully, not as severely as this. And then, look, if I've got some time, I will just share with you. I mean, the last time I was here, I did a presentation on IFRS 10. It's been requested that I just give an update on some of the developments in that. Because, look, although it's an old standard, which was effective 1st January 2013, in my business, this is one of the queries I get on a constant basis on control and consolidation. All right, so that's the agenda. We'll try and finish, inshallah, by 7 o'clock. I will break for prayer. If I'm not, just please let me wave to me or something. I'll just continue. But otherwise, let's start on the topic of leases. So, as I told you, let me give you the conclusion first, before I even go to the first slide. IFRS 16 is going to change, or there's going to be no more operating leases for lessees. Khalas, gone. Every lease is going to be a finance lease. Now, what I also want you to do, whenever there is change, you don't just accept it. You got to ask why. What is the thinking? What are these guys doing? Now, accounting standards change for two reasons. Accounting standards change for two reasons, right? The one, it keeps guys like me in business. No, I'm lying. The real reason accounting standards change is to get better financial reporting. Now, what's the problem with the old leasing standard? There's too many problems with the old leasing standard. Let me put it to you this way. You are asked to disclose that capital lease commitments note because it is necessary. Because there is an obligation, there is genuine liquidity risk in a lease. Companies are leasing too much. In some countries, people use leasing as a tax mechanism. They want to play around with the deductions. But let me tell you something. If I have a 3-year lease to pay $100,000 every year for the next 3 years under an operating lease, I don't recognize a liability. But if I have another arrangement, which is a loan arrangement where I get an asset and I have to pay $100,000 for 3 years, guess what? I recognize a liability. Under both instances, I